Good morning, everyone. This is Beth Ricklefs with IAMS. I'm a life insurance sales director here. I'm excited to have our guest Symetra with us today. We've got Sarah Swanson, Brian Keefe, and Fabian Gonzales with us. We'll do a deep dive into four national uh, potentials there, as well as their product lineup. So this should be an awesome webinar. As always, I will start with a short commercial about IAMS because I know that we have a few agents on here that haven't done business with IAMS before, and then we'll get into the content here. So as new producers with IAMS, we want to make sure that you get started off on the right foot. And so we do have some incentives for you to submit business with us in the first 6 months. We've got different levels, and you can cash out at any time in those first 6 months, depending on what you hit. So for the 100,000 level, what that means is 100,000 of annuity production or 10,000 of target life production. And if you were to cash out on that in the first 6 months, that would be an iPad or 750 of cash. And of course, you can bump it up all the way to the $1 million level as you produce more. Obviously, the prizes or the incentives get better there. We also want to thank any referrals that we get from our agents. Our business is a lot like yours, and referrals are our best source of new agents. So when you do give us a new agent referral, you'll get a $50 one-time when they get contracted, and then you'll also be receiving a small commission off of any of the products that they're writing with us. Now, that's not a haircut off of their commission or yours. That's out of IAMS' pocket, just as a thank you for referring that agent. As continued business goes with our agents, we want to give you marketing reimbursement, and we pay $100 of marketing reimbursement for every 100,000 premium of index premium. With life insurance, if it's single premium life, 100,000 is going to be 200, and for 10,000 of target life, it would be also 200. We have a tremendous back office support, whether it is talking to your directors, annuity or life directors, to help with case design and sales ideas, to case management when a case comes in, managing that case on the annuity and life side to make sure that it's getting followed up on, that we're not missing any requirements, and that we get that business paid as quickly as possible. Also, we want to make sure that you're getting the best sales ideas out there in the industry. We have a great website. If you haven't done so, go ahead and get registered at www.imsinc.com. There's things like the term quote engine, the guaranteed universal life engine. There is a great sales resource library on our website that has a ton of information. I spend some time on there every once in a while. I always learn something new. You can get forms online, underwriting guidelines, product information, anything that you need is on our website there. Since COVID hit, one thing that changed in our industry is there's been a great push towards doing electronic applications, and we have a couple of different platforms in order to do that. Firelight is one of them, and that is going to be mostly annuity companies, but there's a few life insurance companies that use that platform, such as Allianz and National Western Life. The life insurance platform that most companies are on is IGO EAP Solutions, which is also on our website. You'll find the easiest way to get to that is to go to our website, go to products, to life, and scroll down, and you'll see the IGO EAP Solutions. most of the life insurance companies are on there, and that platform also, there's a few companies that you can actually quote. North American, F&G, some of the asset-based products are on that platform too. So here you can see all the different companies on the annuity side that are Firelight. And then, like I said, there's a few on the life side, but no worries. Everything else is on iGo eApp to submit. The exception is American National has their own very own portal that you'd also have access on our website. We have a tremendous creative marketing team here at IAMS in-house. One thing that is wonderful about having our creative team here in advertising, they are very much in tune with the insurance industry. And I hear on the phone a lot of times agents reaching out to different firms that don't have a background in insurance, and what they're basically doing is recreating the wheel every single time. That costs a lot of money. We already have ready to print custom agency things that you might use, like postcards, newsletters, things like that. Our team is fully capable of logo design, web design, anything that you can think of. One thing that I would encourage you to do is we have a marketing analysis system. It's free. So if you get with any of your directors, whether it's myself, Trina, Tony, that would be on the live side, Laura, Lisa, Matt, Brady, Justin, on the annuity side, and do a marketing analysis with that director, we get that over to our creative marketing team, and they design a marketing solution for you. I really love that about IAMS. I've worked at different FMOs, and usually their marketing solution is cookie cutter, that it's supposed to meet everybody's needs, and we all know that it doesn't work because everybody's environment that they're working in is different. So we take a tailored approach to that. Let's see. Oh, I'm having a hard time with my slide here. We also want to be completely full service. So we have annuities, life insurance, Medicare, long-term care and disability, and then we want to be focused also on the wealth management that we have, IAMS Wealth Management. So if you're trying to increase a little bit of wallet share in your business, whether you are already managing money, IAMS Wealth Management is a solution, or if it's something that you're wanting to get into, our team there, Duncan, can help you get the right materials to study for your 65 and things like that. That might be something you want to consider adding into your practice. Every year, we get a great lineup throughout the year of our life and annuity academies. Ours has not officially been announced for 2023, but keep your eyes and ears open to that. It's usually a 2-day producer training, great opportunity to rub elbows with other agents across the country, great sales ideas and things like that. You'll want to talk with your sales director as far as how you get invited and able to come to the Life and Annuity Academy. Our trip this year is the Seaside Sanctuary. We always have an 18-month qualification, and here are the trip dates. And then, of course, follow us on Facebook or LinkedIn to keep up to date with all of the great webinars that we put on and all the content that we have. And with that, I'm going to go ahead and turn it over to Brian.
Awesome. Thank you so much. We are going to start off actually with a presentation on one of the really great programs that we offer over here at Symetra, and that's going to be our High Net Worth Foreign National program. We're lucky enough today to actually have the person that heads up that entire division, Fabian Gonzales. He is able to join us, and he's going to go through a presentation on this program and how it can help you tap into potentially a new market, if you've never worked in this space before, or if you have worked in this space, I think you're going to see that we have a really attractive program, probably actually almost without doubt the best in the industry right now. And Fabian will go into that. So at this time, Fabian, I will pass it over to you and let me know when you want me to change the slides for you.
Excellent, excellent. And thank you, Brian, and good morning, everybody. I have saying good day to all of you from Florida. And one of the reasons why I'm in Florida, because the high net worth foreign national market is a very interesting, and in the Miami area. So, but again, if you are in other part of the country, don't worry, because there are always opportunities for everybody. So, Brian, let's move to the next slide. But before I start, sharing a lot of detail about our program, let me tell you a couple of things, right? One of those things that I want to share with you is that a lot of people think that this is a new concept, that this is a new market, that right now there are people, interested and, foreign nationals, interested in buying life insurance in the United States. But this has been a market for many, many years. As a matter of fact, U.S. carriers has been offering life insurance solutions to foreign nationals since probably from the 80s. Of course, the ways the business was done in the 80s was much, much different than what it is today, right? Unfortunately or fortunately, what happened, between financial crisis and other things has made this business, a little bit different. But anyway, without question, it is a great opportunity. And if you are interested in this market, I would like to tell you that at Symetra, we have a significant focus in this market. Like Brian said, we have a very competitive program. But, programs are very important. But the other thing that is very important is products. And we have also fantastic products. Well, later, Brian and Sarah, they want to share with you more in detail. So first, let's define who is a high net worth foreign national, right? So basically, our definition of high net worth foreign national is someone who live outside of the United States, right? There are a lot of foreign nationals that they live in the United States. Some of those foreign nationals, if they have a green card or if they have a specific visas, they allow them to live legally in the United States. Most of the time, those individuals, we can consider them into the domestic guideline, the same guideline that any person that lives in the United States use from the underwriting perspective, right? But this is just focused only in those individuals who basically permanently live outside of the United States, and for whatever reason they would like to buy, the life insurance product in the United States. Our program is very simple, and just to keep in the mind, right now I am focused on the right of the presentation of the slide. We need basically that all those individuals who are interested to apply with Symetra, we require to all of them have a valid passport. Also, we require a temporary visa, usually is a travel visa, but other type of visa also apply for this program. So if your client have other type of visa, we will be able to consider them as well. Mostly of the countries, they are, allowed to come to the United States. They basically, the United States require a U.S. visa. So that's it's not going to be an issue. And there are some countries that the United States do not require visa. So if you have a client from those countries, we are not going to require a visa to them. Also, we require a minimum global net worth of $1 million or, currency equivalent. This is a very important feature of our program, because most of the time our competitors require global net worth different than us. Sometimes they say, okay, we can consider global net worth, but also you need to have some net worth in the United States, right? So basically for us, if your client don't have, net worth in the United States, it's no problem, because they can apply with us because we require a global network, and the minimum amount is $1 million, right? And also we require a U.S. connection. Most of the carriers require a U.S. connection, but we have a lot of flexibility in the requirement to meet the U.S. nexus, the U.S. connection. And you can see at the bottom on the left side, we have there, potential options, right? And again, there are 6, 7 there, but your client must satisfy one of the following, right? And again, it's one, because some of our competitors, they maybe could have more than one, but for Symetra, we require one. And basically those connections could be, someone who owns real estate in the United States, or someone who have a business. Imagine that you maybe have a customer, let's see, for example, from Mexico. This individual manufactured products in Mexico that he export to the United States, and maybe he have a warehouse where he basically put all those goods that they manufacture there in Mexico here in the United States, and from there, from that warehouse, they distribute those business. So basically that will be considered, for example, a US business, or maybe someone who have a consulting business or any other type of US business, right? Also, people who are employee of a US domicile company, they can use that for US connection. A lot of people that we are seeing is people that sometimes they have family residing in the United States. Remember that, we live in a great country, and of course, wealthy individuals, sometimes they like to, bring their kids to the United States to go to prestigious college and university. So basically, you have clients that they have, immediately family members residing in the United States, they could use that as a connection. Also, individuals who have an employment in the United States, those who have a US tax liability, even people who have regular travel to the United States for business or for pleasure, they can use that for US connection. And of course, US bank account or a US broker account. I always like to say that when you are facing, a wealthy individual that live outside the United States, they probably will have a bank account. A lot of people like to have some, dollars in the United States banks, just in case that for whatever reason something happened, they have, some money outside of the home country, right? So in terms of product, Brian is going to talk a lot more in detail, but our full portfolio of product is available, with exception of something that we call Swift Turn, which is a specific platform that we use for US domestic customers. But if you have, a potential customer who's looking in index universal life with focus on protection, with focus on accumulation, those products are available. Also, you have a variable license, and for whatever reason your client is looking for this type of products, our VUL with focus and accumulation is available for this market. And also terms product. We basically have, a full product portfolio of term. Also, our term portfolio is convertible in mostly of the state, with exception of New York, because in New York we don't have permanent products. So all of your clients are going to be subject to full underwriting. Okay, this is not an accelerated platform. So basically, every individual come to the United States for the solicitation of the business. You discuss with them the need of life insurance. You decide during the conversation with your customer what product makes more sense for these people, for this person, and also, everything, the entire process, it will take place when your client is legal and physical present in the United States. And of course, like I said to you, we want to do a full underwriting for each of these individuals. In terms of death benefit, our minimum face amount is $1 million, and our maximum face amount is 20 million. However, if you have a case where it's more than 20 million for different reasons, maybe your client looking for a death benefit of 23 or 27 or even more, we can do individual consideration in those cases. So don't discard Symetra if your client is looking for more than $20 million, because we have a good pool of reinsurance. And usually when you have a client that's looking for more than 20, we can work with our reinsurance team, and probably we want to be able to help you with the extra capacity that your client is looking for. Something very good also in our program is that we allow 2 types of ownership. Some of our competitors require that the owner of the policy must be a US entity, for example, a US trust or a US LLC. For us, we let this to you and your customer to decide what is best for their option of ownership. So basically, if your client that lives in Mexico or lives in China or lives in any part of the world, and this individual wants to be the insured and also the owner of his policy, we allow direct ownership. But for whatever reason, your client prefer to have a LLC or a U.S. trust as a owner, we allow U.S. ownership as well. In terms of entry issue ages, we're going from 18 to 75, and basically for A and B countries, right? And we have a significant amount of countries in our country list. As you can see, between A and B jurisdiction, we have over 110 countries available. So for A countries, basically we allow all our risk classes. So basically your client, if he medical is healthy, he can apply for and he can obtain super preferred if they meet that parameters. For countries B are basically maximum risk class are going to be preferred. And when we have an individual that is from a C country, the maximum entry age is the age of 70. And with this country, we are going basically to the reinsurance market. And we have been very successful in working with C countries and with the reinsurance market. There are capacity there as well, right? In terms of underwriting maximum risk class, we are going up to table 4, table D. This is kind of a standard in the market. All the insurance companies that play in the foreign national market has the same approach. Something also very unique that is part of our program is that, as you probably know, the underwriting process sometimes could take, 6 weeks, 12 weeks, depending on how good is the packaging of the case, right? So sometimes these wealthy individuals, they are business owners, or they need to travel, around the globe. They are maybe not able to be in the United States for the full process of the underwriting. So using our unlimited power of attorney, they can assign a person that could be, a family member that resides in the United States, or maybe someone who have a relationship, a business relationship, a professional relationship with him. That person can take the delivery of the policy, right? This is, like I said to you, a huge plus, and actually play a very good, it was actually a very good asset during the, COVID pandemic, because a lot of the people flew to the United States to apply for the policy. And then in March of 2020, it was a lot of travel restriction around the globe. So basically those individuals who actually appoint using the limited power of attorney, a professional or a family member to take the delivery of the policy, they can complete and receive, the policy because they basically have this as a backup plan. This is no mandatory. This is an additional option. I highly recommend it because, like I said to you, things can change from one day to other day. And you did a great job, discussing, find the opportunity, explain to your customer, and then when the policy is ready, if that individual is unable to come back to the United States, you basically lose significant amount of time. And time is also money, right? So anyway, that is available as well. So this is kind of like a summary of our program. I highly recommend it to all of you to take a look at program guidelines. We can share that with all of you. And if moving forward in the future, you have a question or you have a case that you would like to discuss, please contact your sales support in your agency, and we will be happy to coordinate with you, an additional call just to go in detail and figure out what is needed to put together that case and help you from the beginning to the end of the process. So with that, Brian, I would like to send back to you.
All right, thank you very much, Fabian. That was great. And as he said, this is just a great program that we offer. The barriers to entry are very low. We make it very friendly to conduct this foreign national business with Symetra. And as we'll go into now, we have some great products that align with this portfolio. So as Fabian had mentioned, with the exception of our Swift Term, which is an instant issue platform that Sarah will talk about, all of our product lines are available in that foreign national program. So we're going to get into our accumulation product. Now, when we're talking about the foreign national space in general, one of the big things is trying to get that tax-free income. Also, in many cases, it's outside of reporting to their home country from a financial standpoint. So the Accumulator Ascent product that we have now is a great option for these types of sales. If you're working with anybody, or if you have worked in the past in LERP designs, that's essentially what we're going to be discussing here, a product that has very low charges and is great at generating that tax-free income that many of your clients are looking for. So a little background on our company before we go into the actual product side. Some of you may be sitting here, and IAMS has a great portfolio where if you sit down with a client, they're going to know a lot of the names that are on the sheet of clients that you have, or of carriers that you have access to. Symetra might not be one of those names. We are a long-standing life insurance company. We've actually been in existence since 1957. We were operating as Safeco Life. So if you've been doing this business for a while, if you're working in the property and casualty space at all, you might recognize that name. But we were operating as Safeco Life from 1957 until the early 2000s. In the early 2000s, a small little investor out of Omaha, Nebraska by the name of Warren Buffett purchased Safeco, created White Mountains Insurance, Berkshire Hathaway. Symetra became Berkshire Hathaway White Mountains Insurance. In 2016, Warren Buffett did what he does best. In about 8 years, he sold us for a $900 million gain to Sumitomo Life Insurance, which is the third largest insurer in Japan, and we have been owned by Sumitomo since. Now, having a Japanese partner is great in a lot of ways. First of all is the infusion of capital. Sumitomo is absolutely massive. Coupled with the Symetra assets, we have total assets that are over $350 billion. That puts us on pace to be, or we're in the top 3 largest life insurers in the US when you look at our assets, as well as Sumitomo. So we are absolutely giant in terms of assets that we hold. One of the other great things about having a Japanese parent company is that Japan has been operating in a low or even a negative interest rate environment for the past 25 years. So in the past couple of years, when we've kind of seen interest rates dip lower, our Japanese parent company has not been scared at all. They've actually given us an infusion of cash. They gave us an entire $40 billion bond portfolio that the Symetra asset management team took control of a year or so ago. So they've just been a great resource in this low interest rate environment where a lot of other carriers have kind of sputtered. We've been able to kind of push forward. We've developed new products. We've had a couple cap increases actually recently, and we do anticipate a couple more as interest rates start to tick back up. So we are in a great position, and we can't really emphasize enough how important that Japanese partner is. And in terms of what Fabian just talked about, having access to a foreign investor in Sumitomo is great for our foreign national program. They really just give us a lot of faith and give us kind of that opportunity to build into those multicultural markets. So it's a great partner for us over here at Symetra. One thing that hasn't really changed for Symetra is our guiding principles. And you're going to see this in all of our product builds and in really just the way that we conduct business. Our guiding principles are VTS. Value, transparency, and sustainability. Everything we do, that is our core mantra. It's not something that we just put on a corporate slogan. We truly do live by it. So in terms of value, we want to provide products and solutions to people at a competitive price. If you go out to our term products, you're going to see right away that we have some of the more competitive, if not the most competitive pricing from a term platform side. Our premiums are extremely low. You're also going to see it in our IUL product that we're going to talk about today. One of the things that we have an emphasis on is extreme low policy charges. There's multiple levers that insurance carriers can kind of play with to change how performance occurs within IULs. We want to pass our value on to our clients. And the way that we feel to do this is by providing extremely low charges. So that's a backbone of all of our IUL products. Transparency. We want to have a simple, clean, transparent product that you can sell and that the client can understand. One of the more important things when you're dealing with these types of life insurance transactions is knowing what you're selling and your client having faith that what they're selling is not some black box that just has levers being pulled by a giant financial institution. We're not that. We want to communicate clearly and openly so people can understand what they're buying. Again, that goes back to the low charge story that we have. We want people to be able to calculate what they're actually getting as a return, how they can understand what they're buying, and just keep it a nice, clean, transparent product. And then sustainability. Our products are designed to stand the test of time. When we're talking about life insurance, there's really only 3 times that your client is going to use it. At death, when the death benefit is being passed on to the beneficiaries, when they're accessing that tax-free income that we were talking about, or when they're going on to a chronic illness or a terminal illness claim. So there's really those 3 points, and we want to make sure that the policy is there when they need it. So sustainability is one of the core values of our product. The way that we build that in from a product side is we have strong guarantees. There's going to be extremely strong guarantees. There's going to be some protections in terms of built-in free riders for your clients that protect their income, that protect them from tax liabilities, that do protect their beneficiaries in the event of a death claim. So we are here when your client needs them. We want our products to be as sustainable as possible, and that's just one of the great things that we've built into our IUL platform. So our key product strengths with the Ascent, we're going to see competitive cash value accumulation as well as distributions. We'll go into the types of loans that we offer. We have participating loans and standard loans. Both of them are going to be great options for your client to access their money. Going back to our transparency and sustainability, we don't want your clients to be loaning out money against themselves at a high rate. For our standard loans starting in year 11, it's actually going to be a wash loan for the client. So if they want to access money from their policy, we will credit the policy 4.25%, and there will be a charge of 4.25%, effectively creating a zero net loan for your client to take money out of their policy. Our participating loans, which we also offer, and this is where the guarantees come in, where we want to have the policy be sustainable and transparent. We have a 5% maximum contractual guarantee for our participating loans. Now, if you're doing a participating loan, you're leaving money in that index loan account, giving your client access to positive arbitrage. So everything above 5, they would have positive arbitrage. We have contractually guaranteed that the interest rate cannot exceed 5% on the par loan side. So it's really just not something that we had to have, but we added it because it's good for the client and we feel it is what's right. So that's the way that we kind of handle the loans in our policies, and I think it's a great option for all of our clients. We also have several focused index options. We'll get into those a bit later in more detail. But we have a couple low volatility strategies that we've partnered with Putnam for. We have a very unique allocation index, which is completely unique in the industry, to Symetra. And then we also have the core S&P, which is kind of that 1 year point to point that you're probably familiar with in the index universal life landscape. On top of that, in our product, we have those strong embedded guarantees, whether it's a death benefit guarantee or an overloan protection guarantee, where if your client's taking money, we're going to guarantee that the policy does not lapse if certain parameters are met. We also have key riders and features that are built into the policy at no cost. We have some added on cost riders, but we have great options for your clients there. And then high target premiums. This goes back to the value. It's not something that you really expect with our story, where we're talking about how low charge we are, but we are passing value on to you, the agent, for doing this work by passing on high target premiums. So low policy costs, high target premiums, great cash accumulation, built-in riders, built-in guarantees. That's really the columns, the pillars that our IUL is formed on. One of the ways that we want to express how transparent our product is from the IUL side is how we time our index credits. Now, this isn't something that's going to show up in your illustrations. It's not going to be right in your face, but it's something that we do in the background that's just good for the client. At the end of the day, we want to do what's right for the client. So the way that we credit our index credits is actually unique in the industry. You would think that more carriers are doing this, but as of right now, it's only us and Midland National that are crediting at this rate. So our approach is to take the beginning of segment value. So your client pays a premium. In this example, we'll say $100,000. At the end of the segment, so you have that 1 year point-to-point index crediting segment, we are going to credit that full premium amount. So we take that beginning of segment value, which is $100,000 in this instance, and we apply the index credit. Now, every other carrier in the industry is going to take charges out. So whether it's a midpoint valuation where they take the average segment value throughout the 12 months that the point-to-point was held, or if they're even using the end of segment value where they've taken charges out throughout the course of the year and credit at the end, that's the other way that credits are happening in the industry. We believe, and the math backs it up, it's a very simple equation. Would you rather be credited on a larger bucket of money, or would you rather be credited on a smaller bucket of money? It's always going to be that larger bucket of money. So we have that built in where your client is getting credited based on the beginning of segment value. It's just one of those things. It's not going to be in your face, but it is something we do because it's right. So we just wanted to share that with everybody today. Now, our key riders and features, these are big selling points within our IUL portfolio. We have some great embedded riders here. So our chronic illness rider, this is going to be the same definition as essentially long-term care. If your client can't do 2 of the 6 activities of daily living, they will have a built-in chronic illness rider as long as they've been rated standard or better when they applied for the policy. So at the time of the chronic illness need, if they can't do 2 of the 6 activities of daily living, we will give them 50% of the policy value, up to $500,000 as a lump sum. So this is great for the clients, even if they weren't buying this for chronic illness care. It's a built-in rider, so it's going to be no additional premium. It's going to be built into the policy, and it's there for the client if they do have the need for it. The same goes for our terminal illness rider. That's going to give you a 75% acceleration up to $750,000, and again, no additional premium for that. Our overloan protection rider, this is great for LERP sales. So we're talking about these policies where your clients are overfunding them, looking to get income out of it. The overloan protection rider is extremely valuable, and I would say even necessary for these types of policies. What the overloan protection rider does, if your client has taken too many loans where the policy is in danger of lapsing, the overloan protection rider will trigger. It will say, we're not going to let this policy lapse. We're going to give it a residual death benefit of $5,000, and we're going to carry it in perpetuity. There's no premiums needed. It's just going to go. Now, why is this important? Well, if that policy did lapse and hopefully the client's taken out more than they've put in, there could be potential tax liabilities. The overloan protection rider is going to protect them from those tax liabilities by keeping the policy in force. So it's just a great free feature that we've built into our policy. We also offer something that's very unique in terms of charitable giving. So if you're working with anybody that's charitably inclined, university donors, hospital donors, really anybody that has that charitable mindset, we have a free charitable giving rider that's included on all of our policies. It's a 1% additional death benefit that is paid out to a charity of the client's choosing. So all the client has to do at the beginning when they're taking that application, fill in a charity that they like, fill in a charity that they've donated to in the past. We're going to give 100% of the death benefit to the client's beneficiaries at the end of the day, and then we're going to create this additional 1%. So if you have $1 million death benefit, we're going to give $10,000 to a charity that they have chosen. So it's a great feature. It's a great way to get those charitably inclined clients to move on a case. It's a great feature that we have. So can't speak highly enough about the charitable giving rider. And again, there's no cost to that. Now, if your client is looking for that chronic illness rider or that chronic illness type sale, we do offer at an additional cost an optional chronic illness plus rider. That's going to be the more standard one that you're probably used to. That's a 2% acceleration of the death benefit. You can take the entire death benefit for chronic illness needs. So if you are talking with clients that do have that kind of sales process in mind where they're looking for that chronic care need, the chronic illness plus rider is a great supplement to add on to a life insurance policy, especially our IUL. Then the surrender value enhancement rider. That is really where the client is waiving a portion of the surrender values for the first 4 years or for the first 10 years of the policy. What it does for you on the agent side, it spreads your comp over 4 years, but we actually give you a present value, so you'd make more than you would with the typical target premium. So it's a great rider if you have that client that doesn't want to see necessarily lower values in the first 10 years. Obviously in life insurance, that's kind of where the cost recovery takes place, but the surrender value enhancement can make that more palpable to the client if somebody is looking at those first few years of policy value and getting a little scared of those. So it's great option there. We also offer a premium deposit account. So if you have a client that's looking to make a lump sum payment, but still wants that LERP concept where they're stuffing money into a policy, keeping a low death benefit to kind of maximize that income, our premium deposit account can take lump sums and spread it out into the policy over a series of years. So if you have $1 million lump sum, you can put that into the premium deposit account and have it pay $200,000 for 5 years. So it's a very simple story. If you do have those clients that are trying to get that lump sum and put it towards their insurance needs, the premium deposit account is a great option there. We also do dollar cost averaging. So in life insurance policies with IULs, they're typically all on a point-to-point basis. So instead of having that 1 year segment where you say, we have all this money and it's going to be subject from January 15th of this year to January 15th of next year, we're going to spread that over 12 months to spread the exposure to the market for the client. So we would create 12 different segments instead of having that 1 year point-to-point segment. So it's just like traditional dollar cost averaging that you might have in your 401k, but we're putting it on the life insurance side. So it's a great option for those clients to spread their risk. Then our index options. The big thing I want to point out here before we get into the nitty-gritty details, when you look at the current index caps, you're going to notice that with Symetra, we have 7 great index options and 6 of them are uncapped. By giving the client uncapped access on the upside, we have potential to really, in those good years where the market captures some high upside, to have great returns for the client. We feel strongly in the uncapped story, and it's a great place to put the money to give your client that market upside. We have the Putnam Dynamic Low Volatility Excess Return Index that we partnered. We have a proprietary relationship with Putnam for that index on the life insurance side. That's going to be a very simple low vol story. We take the three asset classes. We have the S&P 500, the 100 least volatile stocks in there. We have 10-year treasuries and we have cash. And what we're going to do is reallocate that on a daily basis if need be, to give your client access to a low volatility product that's going to have great upside, because there is no cap on that again. Because we're using low volatility, we're actually able to pass that cost savings on to the client. We're going to give them 140% participation. So if that Putnam fund returns 5, your client's going to have 140% par added to that. So a 5% return in the Putnam is actually a 7 in the IUL index, because we have that 140 par. We're also able to offer a fixed bonus rate. So this is great for those clients. In IULs, I'm sure you've heard this before, 0 is your hero, right? You have that 0 downside floor on essentially all IUL products. With the Putnam fund, we're actually able to credit 0.75% per year. So that artificial floor has been raised from 0 to 0.75 because your client's getting that guaranteed credit. It's a great story, especially in down markets, because you've essentially bought up the floor of an IUL policy and you have great access for your client to get the returns that they might be looking for. Now, the more core strategies, and these are the ones that you're probably familiar with, would be the S&P 500 index. Currently, we have an index cap of 10. Expect that to go up, so we are looking at increasing caps in the near future here. But we do have a 0 floor on that and a 10 cap, which is still double digits. It's a great return, good possibilities for your client on the upside using the S&P. Then the AI strategies. This is unique to Symetra. I'm actually going to talk about this more in depth in a couple slides here, but it is a great option to capture that upside once again. So the core index strategies, that's that 1 year point to point. It's generating a return based on the S&P 500. The JP Morgan Efficiente 5, that is the other kind of core strategy that we have. That is a 1 year point to point without a cap strategy. So again, it's a low volatility fund. This one's offered by JP Morgan instead of Putnam, and it's licensed exclusively to Symetra as well. So we have 2 great partners kind of on that investment management side in JP Morgan and Putnam. So if they're looking for a little bit more of that true volatility controlled, where you're doing multiple rebalances year over year, the JP Morgan Efficiente is also an option that is available to the clients. Then the blended, we have a blended option in our core strategies of 50% S&P and 50% Efficiente. This is a straight 50-50 blend. There's not really playing around with that blend. It's a 2-year strategy. So when we have a 2-year strategy, we're actually able to lower our options costs again and pass that savings on to the client. So we could potentially have uncapped access to the S&P 500 on that 50% allocation that they would have. And it does give your clients great potential upside there. Now, the Putnam low volatility return, this is the one that we had talked about earlier, where we have kind of 3 market segments: the 100 least volatile stocks in the S&P, the US 10-year Treasury, and the US 13, the cash is the US Treasury 13-week bill. So it's a great option. It's targeting volatility around 5%, and this is the one that does have that 0.75 fixed bonus associated with it. So a great option for clients that are a little bit more conservative, but still do want to capture some upside. Then the AI allocation strategy. This is the one that is completely unique to Symetra. There might be some questions on this afterwards. We don't have a ton of time to talk about it, but I did certainly want to touch on it. Our allocations in the AI strategy are actually automatically handled by Symetra. So when we were looking into doing an automatically rebalanced IUL portfolio, we pulled a ton of data. And one of the most shocking things to me was personally, we talk about changing your indexes all the time on an in-force basis. But when we looked at our actual product suite and placed cases, of the 10,000 cases that we had, I believe only 14 had changed. So we have like 99.8% of our policies that were in force did not have an in-force index change in the year that we collected this data. So we talk about the story a lot, but it's not happening on in-force business where we're making those changes. Symetra AI Index aims to change that. So we obviously have seen in the past 5 years completely different market scenarios. AI is looking at this by looking at the VIX index. The VIX index tracks the volatility of the entire US equity market. We look at the VIX and we say, is the VIX volatile or is the VIX a little bit less volatile? Now, if we're in a volatile position, which means we think the US equities are in a volatile position, we're going to protect your client and automatically rebalance them into the JP Morgan Officiante Low Volatility Index Return Fund. It's a great option, high volatility in the market. We're going to protect your client, keep them in a low vol fund. Now, if volatility is low, we say, okay, there's some good growth opportunity here. We're going to give your client access to the S&P. But because we've already controlled volatility by looking at the VIX, we're able to put them into an uncapped S&P. Instead of having that typical 1 year point to point where you would be capped at 10%, since we're already accounting for volatility, we're actually giving your client uncapped access to the S&P on a 1 year point to point basis. It is a great option for your clients, and it's just very transparent. Again, this is going back to our VTS story. We want to have that active management in the policy. Let Symetra take the reins for you. We know how many clients you have. You're going back and doing those annual reviews, but this is a great way to keep your clients actively managed within an IUL chassis. And we are the only life insurer that offers something like this, where we're actively managing the investments or the allocations in your IUL policy. So that VIX threshold, this is just a very simple visualization how it works. If the VIX is less than 16, like I talked about, that's a low volatility market. We're putting you into the S&P uncapped strategy. If the VIX is high volatility, that means the equity market's going a little crazy. We're going to protect your client, put them into a low volatility fund. We put you into the JP Morgan low vol fund. So it's just a really great strategy. And again, that would be automatically rebalancing. Now, in terms of where the AI strategy compares to a traditional capped life insurance product, once you get over about a 3% rate of return, the AI strategy is great. You're going to have that upside. This is in the green. The green would be the AI. The blue would be a traditional capped life insurance policy with a 10% cap. So the AI with a 3-year spread and 180% par, that's our 2-year, is actually crediting over since 2001, 8.7%. So we can't show that on an illustration, but it is a great return that you'd potentially be looking at. So we do want to highlight the upside that you do have with the AI strategies and how well this thing back tests. So not only do you have that active management for your client, you also have great returns. So it's really a win-win if you are looking for a unique strategy that's not offered by any other carrier. So the Symetra AI Index, can't speak highly enough about it. Then our competitive analysis. This is kind of the meat and potatoes where the rubber meets the road. I've talked a lot about how good our product is, but now let's look at it. So the Symetra Accumulator Ascent product, in a case for a 55-year-old female, and obviously we can run designs for you. This is just what we picked out for this presentation. Using standard loans, which as we talked about are wash loans starting in year 11, we have a client paying $100,000 for 5 years. From ages 16 to from years 16 to 35, we're taking monthly distributions, and annualized, we're getting $78,408 out of the policy. That puts us at number 1 on the spreadsheet. Now, spreadsheeting is great, but how are we getting to this number? This goes back to our VTS story. So we have the best maximum distribution rate in the cell, but we also have the lowest charges. So this is just a great story. You can see how our low charges are passing the savings along to the client in terms of additional income in retirement. It is a great, great story. It's something that we are committed to. We are the low charge carrier. So when you think low charges, you should certainly be thinking Symetra. This also puts us in a very favorable position in times that clients are dumping a large lump sum of money into a policy. So any 1035 exchanges that you might have, Symetra is going to look fantastic. If you're looking at short plays, those traditional LERP designs where you're doing a 3-pay, a 5-pay, a 7-pay, with our low charge structure, we're not going to be taking as many charges out up front, which is in turn going to give them more accumulation value and on the back end, more income. So it's a great story that we have. And again, it's all centered around that low charge story. Now, the same thing showing a male at 55, still in that #1 position in terms of max distribution, still in that #1 position in terms of low charges. Now, where the inverse is kind of happening is that target. We have low charges, we have the best income. You would expect us to probably have low targets. That's not the case. We have very high targets, and that's passing on to you as the agent. So just really a win all around, a win for the client, a win for you. And then we are going to do our best, and we have a great in-force team as well as a great new business team to help you process all this business. IAMS is a great partner. They're going to have a great in-house team to kind of help you get this business through as quickly and as effortlessly as possible. One thing that you'll notice here, this is a male age 55 and the initial death benefit is $1.1 million. One thing we haven't talked about yet is our competitive underwriting on domestic business. So this doesn't apply to what Fabian had talked about in the foreign national space, but for domestic business inside the United States, for clients up till age 50, we can waive the paramed and the blood tests up to $3 million. Now from ages 50 to 60, which this client would fall into, we can waive those paramed requirements all the way up to $2 million. So a client like this can be getting $75,000 of income. You can be getting a target of $41,000, and this client doesn't ever have to sit down with a medical examiner to do labs, to do the blood pressure readings, any of that. So it's a very simple story for your client to get issued this coverage, and a great way for you to generate income to your business, and a great way for that client to generate potential tax-free income in the future. So just a great way of doing business with Symetra, keeping it clean, living on those VTS standards. So if you have any questions about our accumulation product or about really any of our products in general, feel free to reach out to our sales desk or reach out to IAMS, reach out to myself and Sarah directly. We can get Beth the information, our contact information. I believe they should already have it, but we'll get you our direct contact information. So if you have any cases that could be looking like they are a fit for Symetra, certainly reach out to us. And at this point, I'm just going to pass it over briefly to Sarah to talk about our Swift Term product, and then we'll get into a Q&A. So Sarah, if you'd like to talk about our Swift Term product really quickly, and then we'll do a couple questions.
Yeah, I'm going to go into some detail about our newest term offering of Swift Term. So unlike the other products that were discussed, this is for domestic cases only. And Swift Term, it's completely and fully automated. It's an online term product. It's really fast, easy, and unique, and has very competitive low rates that we actually made even lower just recently. So one of the biggest items that makes this unique is a 3-pass that we have with Swift Term. So rather than having an accept or decline, we have 2-pass for the clients to meet their success. And so those pass are instant approval. That's 18 minutes or less. The client can go ahead and have an application in hand. We have accelerated underwriting, and we have full underwriting. So the first path is instant approval. So with instant approval, we're actually underwriting simultaneously while they are entering this to give a real-time decision. So coverage is possible 18 minutes or less with instant approval. And one thing to note there, agents do need to be pre-appointed for Swift Term for that very reason, because a client can have a policy in hand. And the second path is accelerated underwriting. This is generally 24 to 72 hours, requires light human touch. This may be just a question that an underwriter needs to get cleared, so they will just go ahead and send an email, and that generally is 24 to 72 hours for that path. And the third path is full underwriting. This path does require an exam, and it's really nice because it's located right there and then for the client can go ahead and schedule their exam while they're on the application. And really, regardless of the path, even if they go full underwriting, it's still a third of the time a traditional underwriting. Brian, real quick, could you flip to the next screen? So the product itself is for 20 to 60 years old, but the target ages is 25 to 50 years old. It's offered as low as 100,000 and to 3 million. We have all available risk classes, including rated and substandard. Could you go on to the next, Brian? And we offer 10, 15, 20, and 30-year terms, accelerated. For our included riders, we have the accelerated death benefit for terminal illness, and we do have some optional riders of accidental death benefit rider, children's term insurance rider, and waiver of premium. And the nice thing with this can be converted to permanent life insurance. Currently, it's our CAUL that this can be converted to. And the nice thing with that, as Brian mentioned, it has the chronic illness rider is included within that. Could you flip to the next? And this is the process of Swift Term. So once the agent is appointed, they will complete that drop ticket in iPipeline. It's completed on iPipeline, just a couple of minutes. The application is automatically emailed to the client. The client completes the application using that e-signature, and then one of those three paths I mentioned will be emailed over. And if the client has that instant approval, they can go ahead and just do their online payment and complete their transaction. So that's a very, very fast approach to Swift Term. If you have any questions on that, please reach out and I will be able to get you all of that information, or even have a one-on-one if you would like as well. Thank you so much for being here today. Very much appreciated. Do we have any questions?
I don't have any see any questions yet. I'll go ahead and ask the polling questions, but if anybody has any questions, go ahead and type those in. So I'll start with the first one, which is, let's see, have you written for national business in the past?
Beth, do you want me to pass presenter over to you?
Oh, you don't have to.
Okay.
All right, I think we got all of our votes in there. And then the next question is accumulation IUL a big part of your revenue generating strategy? Okay, I think we got everything there. I still don't see any questions, but this was awesome. I know me personally as a life insurance marketer, I get the question on foreign nationals a whole lot. And usually there's something on the underwriting guideline that knocks somebody out. I'm always trying to figure out where they can actually be placed. Those are great parameters that you have. Also, I love the story of, Symetra story and your accumulation product. Me personally, I have a question. I forget how this works. If you accelerate for the chronic illness that's included and you have the chronic plus, do you still get the lump sum and then you accelerate at 2% for the whatever is left over, or how does that work?
Yeah, absolutely. So it's actually a great double option that we have here. You can use the chronic illness and the chronic illness plus, and exactly how you said. So the 2% would be based off the new number after that chronic illness acceleration. What we have seen in the past and kind of how we position it is at the beginning of care, if your client does have that chronic illness need, a lot of times there's going to be modifications that are needed to the house. So if somebody is no longer mobile, we're giving them access to that lump sum. They can use the up to $500,000 to make renovations to their home to just make it livable, whether it's making it wheelchair accessible, whether it's changing some of the bathroom fixtures, whatever it is, just to make their home more comfortable, get that in shape for where they need it to be. They can use that lump sum of money to make those initial changes. I think there's a higher cost kind of in the early stages of that chronic illness care, and then later on we can use that more comprehensive plus benefit to give them that 2% acceleration to maintain their standard of living at that point. So it's a great double whammy, and that's a great question.
And then I did finally get a question here. They want to know, is that available on the term as well?
The chronic illness is not available on the term. The term is convertible, so once they convert, we would have the chronic illness built in on the term as long as the term was issued at standard or better. And then if additional underwriting, if they did want to go through additional underwriting, we could have a conversation about adding the plus, but there would be additional underwriting required if we were to move forward with that. Mm-hmm.
Okay, great. Well, again, thank you so much. That's our hour. If you have any questions, you can always direct them to me, and I will make sure you get the right information. But thank you for spending your Monday after the Super Bowl with us. Certainly appreciate it. Take care, everyone.
Thank you so much, guys. Take care.
Thank you.